Hello and welcome to the channel. Welcome to TMP Group. My name is Tom. Today is Sunday. It's the 6th of February, 2022. And super happy you decided to stop in today. Definitely wanted to talk about the portfolios that we have here in the TMP Group, how we rebalance the portfolios, how we tend to our portfolios, how we grow our portfolios, and how we believe we will be able to grow a strong portfolio here in 2022. This is definitely not financial advice. I'm not a financial planner. No members of the TMP Group are licensed brokers, financial planners, or financial advisors. Simply individuals that have committed themselves to long-term investing and creating generational wealth. So as you come in today, if you would, hit the like button. It'll help with the YouTube algorithm. And then hit the subscribe button if you want to hear more from us. Try to come on here at least once or twice a day, every Monday through Friday. And then try to hit you a couple times on the weekend. Okay, so what are we doing right now with our portfolios? Where do we see the market going? And how do we think we can capitalize on the turbulence and the choppiness in the market right now? When I talk about a portfolio and having a successful portfolio, a successful long-term portfolio that will build generational wealth, I think of my portfolio the same way I would think of a garden or I would think of a farm. And I want to have the right crop, if you would, or the right plants and trees in the garden, the right crop in the farm. So 80% of my dollars in my stock portfolio are going to be committed to what I call the Super 7. And these are my money trees. These are companies that we own, companies that we invest in, companies that we are not looking to trade or to sell off, companies that we will continue to invest in. And one of the things that I think a lot of investors, especially new investors, don't understand is that investing is something that we have to continue to do. You don't just buy a company, hold on to it, and watch it grow. You need to continue to cultivate that position. And by cultivating that position, I talk about DCAing or dollar cost averaging into that position. So our money trees, you can go back and look at a video I've done on our Super 7, but they would include Microsoft, they would include Apple, they would include Google and Amazon, NVIDIA, Tesla. These are positions these are stocks that we have bought, that we continue to buy, we get into full positions on, and we continue to grow. And we know that these will bring us generational wealth over time because they are companies that have a proven track record. And they are companies that we don't have to worry about when the market goes down. We know that these will rebound over the course of our long-term investing. And when I talk about long-term investing, you know, the horizon is somewhere between five years plus. And that's what we're looking at. So those are the money trees. Then we have a group of stock, which I would commit 20% to, which are, I hesitate using the word speculative stock because we don't like to speculate a whole lot. We do like to invest. But there are high growth positions in these, in the other 20%. And we always need to take a look at these flowers or these crops, if you would, in our portfolios. And we need to give them attention. And so I picked out four, and those are the four I want to talk about today that we believe need some more attention here at these levels. Looking at our position, looking at what our average buy price is and how far down we are in the position. And the goal here is to lower our average buy price. So what I'm going to do is I am challenging myself and committing to buying into these for at least the next 10 weeks. I'll try to come on here, at least once a week on each stock and give you the progress and see how close we can get with the market rising and the lower amount that we're buying in at. If we can get our dollar cost average down and our average price down to be a lower percentage than we are right now. So we're going to talk about four today. The first one we're going to talk about is Draftkings, trading under ticker symbol DKNG. And just so you know, I personally am in Draftkings as one of my core growth stock positions. My average buy price on Draftkings is $35. Now, Draftkings market close on Friday was $21.82. So that position is currently down 37%. The idea is once a week, to average into Draftkings regardless of the price. And I'm not going to do a whole lot, you guys. I'm probably going to take about $200 per position. And there's 4 positions here, so about $800 over the next 10 weeks. So commit about $8,000 to this and see where we end up. At first, I thought I was going to do about 50 per stock times 4, 200. But I think I need to take that up to about $200 per stock. Now, depending on what your financial situation is and your investing risk tolerances, you can do the same. You can find the stocks in your portfolio that need this kind of help. But looking at DraftKings, like I said, our average buy price is $35. We've been in DraftKings for well over a year, year and a half. And closed on the market at $21.82 on Friday. We're down 37%. If I take a look at the tip ranks on DraftKings, the analysts have this in a 12-month time frame to go back up to $41. So it's about a 90% gain from here. And I like to look not only at the average analyst price, but take a look at the low and the high. And the low on tip ranks is $23, so it's about $1 and change over where it's at right now. And the high is $70. Do I think we'll hit 70 in 12 months? Probably not. Can we get closer to that $40 to $50? Absolutely. DraftKings is the first of our growth stocks that we will put into this DCA challenge over the next 10 weeks at $200 a week per stock. All right, the next one is SoFi. Our average buy price on SoFi is $13.95. It's about $2 over where it closed on Friday. On the 4th, it closed on Friday at $11.85. We're down only about 15% in SoFi. I want to try to get that average down below 5%. So we only have below 5% in the next 10 weeks. And why do I say 10 weeks? Number one, it's an easy number to multiply. But number two, I believe that in about 10 weeks is when we will see the market really, really ramp up. I think we'll have some green days and be mostly positive over the next 10 weeks. But we're definitely going to have some choppiness and some good buying opportunities. So we'll DCA into SoFi. Taking a look at tip ranks. Tip ranks has a low of $16, so about $4 higher than where it's at right now, and it has a high of $28. So the average comes in right around $20, which is about a 70% upside for SoFi. All right, the next two are both in the EV sector. The first one is ChargePoint, ticker symbol CHPT. CHPT closed on Friday at $13.12. And our average position in ChargePoint is $22.02. So we're down 40% overall in ChargePoint. ChargePoint needs some cultivating. It needs some help here at these levels. We still believe ChargePoint will emerge as the leader in charging stations throughout the United States. So we will definitely put this into our challenge of $200 a week going into ChargePoint for the next 10 weeks, meaning we'll add $2,000. We'll DCA in it over 10 weeks. And taking a look at where Tip Ranks has us, Tip Ranks has the low about $2 higher than where it closed on Friday, so 15, but it has a high at 37. So that gives us an average of $27. $27 average based on a current buy price of $13.12 is over 100% return that they expect for ChargePoint. I do not disagree. Again, this is just my opinion and my opinion only. I'm not telling you what to buy, sell, or hold, only what we're doing, hopefully point you in the right direction and let you do your homework. The last one, last but not least, is a stock that really hurt us last year, but we held on to it because we believe in it. That stock is the Chinese EV company, none other than NIO, trading under ticker symbol NIO. NIO, in our opinion, probably has the most upside of any of these 4 stocks. However, we will commit the same dollar amount to it, $2,000 spread out over 10 weeks, so $200 a week for the next 10 weeks. And we'll try to bring our average down. Currently, we're down 34%. Our average buy in NIO is $36.46. And NIO did close the market on the 4th of February at $24 and a penny. So how much room do we have to run in NIO? Well, if you look at Tip Ranks, the Tip Ranks average analyst has it at $62. So almost a 200% return. If we look at the low is 37 and the high is 87. So there's a lot of room to run in NIO. NIO we definitely want to put into our $200 a week movement for the next 10 weeks, and not put a whole bunch of more money into these, because we definitely, at least myself personally, I have a great deal of exposure to Draftkings, to SoFi, to Neo, and to ChargePoint. I do believe, though, that that we can buy at these levels, and we can bring our average cost down. And then as the market rises, we will be in the in the green overall, as opposed to the red. So hopefully this makes sense to you. You do need to balance out your portfolio. As far as the garden goes, or the farm I'm talking about, make sure you have your money trees. Make sure you have your flowers or your crops that you can rotate. The money trees stay planted. The crops and flowers, they tend to grow. Some will even turn into money trees. In fact, it won't be long from now that the Super 7 turns into the Great 8, because we are looking at adding one more stock that we believe deserves to be in that core position that we dedicate 80% of our funds to. All right. That's about all I got for you today. I hope you're having a great weekend. Hope you're enjoying some football. And having a good time with your friends and your family. Have some good food. Market opens in less than 24 hours. We should have an interesting week. Stay convicted on your stocks. The best bet you can make in life is a bet on yourself. As investors, we're not gamblers, but we do make bets on ourselves. We make bets on our future. We want our money to work for us. When we go to bed at night, it's sure nice knowing that we're able to sleep at night because our money's working for us. When we wake up in the morning, it's been working overnight, and it continues. Every day that you invest is a day that you do not have to work. So remember that as you're investing right now. Have a goal, have a plan. It will pay off in the end. Stay away from, tune out the FUD, the fear, the uncertainty, and the doubt. And do not let short-term temperament shake you from long-term successes. The market will reward patience. So we stay patient. We'll work through it. We'll work through it together. I'm super happy that you came in today. Again, if you do like what you hear, hit the like button. Like I said, it helps. Leave me a comment as far as what your money trees are and what your crops are. And guys, if you have weeds to pull out of your portfolio, pull those weeds, because they do nothing but drag you down. All right. I do hope everyone has a great day, and I hope to see you all on the next video.